All right. Good morning, ladies and gentlemen. Today is December 9th, 2020, and I'm back with another Wednesday edition of the live show. And getting close to the holiday season, seasonally, a very strong time of the year for the stock market. And of course, as I speak, market's basically at all-time highs. Kind of a weird session overnight. The market gapped up and it basically traded sideways. And yeah, it's the strength in the overall market's undeniable. And interestingly enough, we've got quite a few open trades. As I mentioned last week, even though the market itself hasn't pulled back, market itself's been kind of on a tear here. But plenty of individual stocks have had their normal cycles where they cycle up and down. This is a year-to-date chart of the S&P 500, and a lot of interesting stuff has transpired this year. But as I zoom in, it's pretty amazing actually that we had this kind of double dip here, this W pattern broke out of the top of it. But what's most amazing to me, and all I did here was connect kind of the recent lows here just to show the sort of angle of, I guess you could call this kind of a melt up of sorts because it's kind of unusual for the market to make a move like this. And of course this is positive vaccine news. It's all we hear about these days, but positive vaccine news, and then it's managed to continue to kind of go higher. So this is kind of an unusual looking pattern to me, honestly. And I think that as we speak here, the main trend line probably, there's a few lows there that I've connected, and so like a pullback to there would, feel like a dip, and quite frankly, it would still be well above the highs. I'm gonna say that this is probably put a horizontal line there. That's probably like the breakout level, I would say. This was kind of a little bit of an anomaly. This was almost like a blow off top here back on 9-2. Market had been rallying up, and then gapped up, put on a long range day, and then you can see what happened right afterwards. So um it seems like, let me go to a different chart here. RSI is getting up towards 70. The Yeah, what I was about to say, this MACD here. So like the momentum of this move here is kind of petering out a little bit, right? I mean, the market's still going up, or it has still been going up for the past couple weeks, but the momentum seems to be a little bit waning, which, if you step back and look at the bigger picture here, um, off of this low here, 32, 30 something, 37. There's 500 S&P points in a very short amount of time, so kind of interesting there to look at. Give me a second. Sorry about that. And of course, the other indexes, same sort of thing. The Qs have this weird sort of gap back here, which incidentally, there's a couple of our open trades that basically got filled, like right in this area where the Nasdaq gapped up real big. But yeah, I mean that was a decent pullback, and then it just blasted higher and consolidated for a little bit. But now it's breaking out. It's breaking out the highs. So, and most interestingly is the Russell, which is just on an absolute tear here. This is the high from like back in 2018, I believe. Yeah, back in 2018 it hit this high, and it took until, just a few weeks ago to actually break out of it. So it's a kind of an unusual pattern right there, considering the considering the sell-off that happened in the spring. But so it is what it is, and like I said, we got a pretty good batch of open trades here. And so I thought we would take a look at those and go through the charts. We have one that just opened a couple of days ago, a brand new swing trade, and then the other ones have been open for varying amounts of time. But I want to start with AMD because it has been open the longest. So let me zoom in on just this particular swing trade, because you see we had we had another one back over here back in October. Same sort of thing. Actually, if I zoom out, you can see like this big sort of W pattern that's on the chart. And so kind of interesting that it seems to be sort of not stalling out, but yeah, well, it's consolidating here way back at the prior highs from the end of August, which is kind of interesting. But the system is designed to take advantage of this type of cyclical price action. And so let me zoom into just the current swing trade here. And this is the one that I was thinking about when I was looking at the cues there, the way the NASDAQ gapped up, you know, right here at the beginning of November. And so this the fill on this particular swing trade was kind of weird. The fill would have actually been up here in theory. So the trigger price was 79.40, closed above the trigger that day, gapped up fairly significantly the following morning. And so this was the original target shown in the system there. The target was 84, and of course, since it gapped up here, I put the what I call the compensation target up here to make up for the gap over the trigger price. So you guys have been watching for a while know that that's the kind of the standard way of of using the targeting now. And so you can see what happened. Actually, the price did a few days later trade down at the trigger price. So it's kind of a weird fill, but at the same time, you can see what's transpired since, and kind of goes to show that you don't necessarily want to avoid a stock that gaps over the trigger, because a lot of times when they work regardless. So, and you can see the original trailing stop was sort of down here at the bottom of the pattern of the pullback that it had. And anyway, so far so good. Been an extremely strong stock, and it's kind of volatile up here at these highs since the price is so high. But that was a really nice sort of, after this initial sort of craziness when it triggered in, it was a really nice sort of orderly run up, and then there was this long range day. And so this is a parabolic stop that kicked in, but trailing stop currently at 89.50, and so far so good. Everything looking pretty good there. Um, and so this is the one that's been open the longest. This has been open since back here on actually 11/5 is the day that it triggered in. So 11/4 is the day that it closed over the trigger. You can see the date here, 11/4, and so that's the day that it closed over the trigger, and so it became a buy the next morning at the open. So moving on, we didn't have the next one that is still open that triggered in is this HLI, and that triggered in. So all the rest of them that are open here in the list have triggered in more recently, and it's just kind of a thin stock, but sometimes that works in your favor, right? Look at this pattern. So basically, Basically what's happening here is very similar to this pattern back here that started in towards the end of September and into October, where basically, it had a pullback and then it started moving up and it just ran up. And so that's kind of what it's doing right now. Interestingly enough, and I expect this stop to come up tonight. So I was kind of surprised that the stop was still hanging back this far when I did the update last night. But so I mean, there it is. You've had a couple of stop moves here, and the stop is kind of hanging back under this congestion. There was a little bit of a gap on this one too. Um, I didn't draw the compensation target, but I could. So let's see, the open this day, 65.01. Let's call it 65. So, I mean, we're talking, 71 cents. So basically, you know, 67.71 if you wanted to have a target, I'll call that the C target is what I call it. So the C target would be 67.71. And so, you know, like I say every week here, no big deal about a stock gapping over the actual trigger price because stocks are really gappy these days. I mean, that's just sort of the way that it works. Is stocks, they gap up, they gap down, the market itself gaps up and down, and so obviously, there's nothing anybody can do about that. So the way to compensate for it is to adjust the target when you get filled at a different price than the trigger price. And so I strongly recommend that you stick with the actual trailing stops because they're calculated based on the ATRs and what actually happened in the market. So the trailing stops are moving based on, the closing prices of the actual bars, but your entry is going to vary a little bit. And, obviously when a stock triggers in, we recommend, just jumping in near the open the following morning. And so your fill is going to be a little bit different than, depending on whether you wait or whether you try and get in, right after the open. But I mean, the market tends to, act really kind of weird right in the first couple of minutes of trading. A lot of times you see, a lot of times you'll see just really weird price action in just the first few minutes of trading. And I guess that's like there's a bunch of orders probably sitting around that are like buy on at the open. And so they get people have limit orders in and they all get executed, and so the price tends to, on certain stocks, can be kind of weird right at the open, and so you can get all sorts of different fills. But anyway, here's just another example of the idea that not to sweat the small stuff as far as like the trigger price. And of course, the trigger wasn't really, as I mentioned a bunch of times, trigger wasn't really designed as like the price that you want to get in at necessarily. It's possible to, if you wanted to do this, it's possible to set a limit order at the trigger price. And so like on this particular one, it closed here and then, being 71 cents over the trigger price, no big deal. But theoretically, if you set a limit order at the trigger price, you might get filled the next couple of days, right? If that makes you feel better. But I'd strongly recommend that you just kind of trade this mechanically and just go by what the system shows. And so when you get a little gap up like that, no big deal. And you can see that, and then the idea is that you compensate for it on the target so that you're basically getting the same sort of move that you would get if you got filled at the trigger price, at the exact trigger price and what the target shows. So anyway, here's another one that basically when it started running up, and of course, the market itself has been just on fire, right? So um, it's been a very, very forgiving market, and obviously you can only trade, so many stocks, but this should be like really super easy on your nerves, right? I mean, you don't have to sit around and stare at the charts all day or worry about the intraday. And so that's what, this is basically designed to do is get us into stocks as the trend goes from a pullback to a rally. And so this one looking pretty good. Let's move down, move back a little bit. GDS here. This one's not really going anywhere yet. It's sort of still consolidating. I mean, it had a little bit of some wild price action back here, and then earnings came out, and then so it triggered in kind of on this upswing here, and it's still sort of consolidating that. Um, the the trailing stop on GDS is, for whatever reason, I don't have it marked on here. It's ratcheted up to, I'm gonna put it on right now. Trailing stop has ratcheted up to 87. So it's gonna be right there. Just a very slight sort of ratchet on this, and you can see why. Generally speaking, the trailing stop is going to, whoop, it's hard to talk and think about typing at the same time, but so there we go. Trailing stop 87, kind of moved up just a little bit here. The price is kind of going sideways, but it's a pretty volatile stock too. So as you know, we closed these on earnings too. That's why I have this on here and have left it. So this prior open trade would have gotten closed, at the open the day that earnings were coming out, or actually the day before. It depends whether they do it before or after the bell. But so, so far so good. Not a bad looking pattern here. I'm going to say that obviously it needs some forward progress, but it still looks completely viable here. Really, it just needs to get something going, break over yesterday's high. So this next one is this next one's pretty amazing. This IOVA, really, really nice looking pattern here. I think I mentioned last week that this would probably be one of the best examples of what an ideal swing trade would look like. Just amazing. And the cool thing about this, I mean, what really stands out to me here is well, you had this run up and this sort of consolidation, but this last pullback before this triggered in, you notice like these 4 or 5 days here, right? So what happened was you had a pullback, and then you had like really tightening up of the range, which is ideal. You don't always see this, but in the past, over the years, we've always talked about, the ideal swing trade setup is where you get, sort of a pullback and then a consolidation. You get some real tight ranges there to play off of, and then it starts to turn back up. And I believe yeah, we looked at this last week, and I pointed out how, right after those tight ranges, and it started cycling back up. You had that MACD go from negative to positive. So just everything about that, kind of stands out to me visually. Um, and so there you go. Trigger price was back here at $38 and triggered in this day. And what's funny is on 11/25 it closed at 37.94. It's about as close as it gets. And then the next day, it opened at 38.05. And so in reality, the actual entry would have been right there at the open this day. And again, the open that day was 39.77, so it was a $1.77 gap. I never did put the target on this one, but the original target in the system is, and these targets are based on the volatility and the ATRs of the stock. And so the system is showing that, and of course you got to go by percentages too. That doesn't look like much, but percentage wise, it's fairly significant. So anyway, the target in the system, $41. Compensation target would have been what, 42. What did I say that open was? 970, so a dollar, so $1.77 more. So 42.77 would be the compensation target. And you can see that in the big scheme of things, let's see, that's going to be down here. When stocks make a move like this thing has made, a lot of times the scale of the chart makes this look like nothing, right? But obviously, before this long range day here, it looked a lot different. So, but anyway, this is a great example this is probably a perfect example of why you don't want to necessarily worry about getting in on a gap up, right? Just, it hit it hit the target here last Friday, and then Monday put on this huge long range day, and pretty amazing. So biotechs have been hot. That's one of the strong sectors, and so it is what it is. But that's just a beautiful, that's what you call a swing, right? A little pullback and a swing higher, and still going, right? And so you can see the trailing stop's kind of weird on this one because obviously it started off down towards the low of the pattern, and then it came up to basically to break even almost right away based on how it moved. And then because of, these long range days and the way it worked out, this trailing stop just went right up under that long range day there. And that's a pretty good spot for it. Although quite honestly, I'll be honest with you, you always have a little bit of discretion here. This trailing stop is basically designed to keep you in. Like if this stock's going, way, way higher, the trailing stop is designed to keep you in for sort of normal price fluctuation based on the ATRs. I would not be inclined to let this thing, come all the way back down to here. Although, quite frankly, by the time that this stock could work its way back down there, the trailing stop probably will come up even more. So it won't surprise me in the next couple of days to see the trailing stop basically up under yesterday's low. But so anyways, you can always I'd be more inclined to protect this thing, you know. Obviously, you want to take half off at the targets, and then or even a third off at the targets. It's up to you depending on how you want to play it, but I'd be more inclined to protect this at yesterday's low. That's a huge significant game there. As of last night's close, this thing was up about, over 20% basically. So it would have been up, even over around 20% from the actual entry. So it was up almost 24% from the trigger price. So there you go, looking good. Next up on the list is Pfizer, of course, and Pfizer's had like this big run up here, and it's been really super gappy. So same kind of thing right there. I don't want to just drag this out as far as the targets and all that. So basically, here was the trigger price. It gapped over the trigger, and it's had a pretty nice run up here, right? So take a look at that. Zoom out on the chart a little bit. Yeah, that's quite a tear for Pfizer there, quite frankly. And of course, everybody knows the news, and so it's not necessarily a huge surprise, but it's kind of interesting. Interesting the way that this move has transpired, and so the stops ratcheted a few times, and basically it's come up pretty quick, and that's based on this huge run up. Um, so looking pretty good actually. And again, this is a lower price stock than a lot of the ones that we see on the list, and so that's a pretty good move that it's already had, even from this crazy gap up entry over here. So far so good on that. Moving up the list, we have LITE. Looks like I drew a bunch of stuff on here last week, but just finally poked at the C target yesterday. 91. The high was literally at that target. That's interesting. I mean, to the penny. But still, so far so good. So take a look. Yeah, basically the stock, had a run up, consolidated for like a month there, and then, this may have been earnings or something over here, but had a really nice sort of pullback, um, little sideways consolidation, and then triggered in, and you can see that it's basically formed the big cup here. Um, don't sweat the pennies on this stuff. Something comes, within a penny or whatever, that's fine. So, like it basically trade, if the ask was 91.95 and your target was 91.95, better off not sweating the small stuff. The nice thing about what we're doing here, and the real game changer is that, there's zero commissions now. And so that's a lot different than back in the old days. You'd split a position up, and depending on your position size, splitting a position into two or three, buys or sells or whatever, you could get eaten up with commissions. But nowadays, you don't have to worry about that. And so that's really, really a game changer. And it also means that, trading more expensive stocks with a smaller account is still no big deal. Right? So, I mean, it's no big deal to trade, 15, 20 shares of a stock like this, and even, exit two different cells. So scaling is honestly, that's the one thing that can kind of give you an edge, especially with any kind of trading, right? So the idea is that you latch on to a stock that moves in your favor, and at some point you want to take some off the table, um, because the worst thing is, I mean, the worst thing, and we've all done this, is to get into a trade. It moves in your favor. You got a nice gain in it, and then you get confident or whatever, or maybe for whatever reason you decide you're just going to hang on, and then what happens is something, you get one of these down cycles in the market, or your particular the sector that your particular stock's in, goes out of favor for a short amount of time, or there's profit taken, whatever. But there's nothing worse than having a nice gain and then watching it evaporate and melt away and go all the way back to what you paid for it, or worse yet, turn into a loss. And so the way to avoid that is to lock in some profits at some point. But here's the thing: is that it doesn't have to be an all or none thing, right? So if you take partial profits, right, sell part of the position, you've locked some in, and then you still have some shares if it just continues to go higher and continues to move in your favor. And so psychologically, that's a huge sort of benefit to you because you feel good, you feel good about taking some profits off the table. You reduce your risk and your cost basis, and you're still participating. And so if the stock continues to go higher, then, you're still in it, just not with as big a position, but, it's a double-edged sword. And so if it goes back down, um, first of all, if you locked in some profits, then your chances of letting that trade turn into a loss are reduced also. And the way that the system ratchets up the stops here. So, if you took some profits at the target, if it comes back down and hits a trailing stop at break even, I mean, it still pencils out as a profit as opposed to, 'cause some trades will do that. And that's why the targets are there. Some trades, will rip higher and, go up significantly. And then if you just sit on your hands, they'll come all the way back down. So let's move on here. QDEL, just kind of hanging around the trigger price, right? And this is one that, and I mean, there's a lot of potential here. This is quite honestly, this is still looking really good. There's that gap, which is kind of weird, but I pointed out the past couple weeks that there's also a gap here, a little bit of consolidation. I mean, it kind of looks like there's some symmetry here to, what happened over here and what's happening here. So we'll just have to see. But, sometimes this is what happens is you get into, we get triggered in and then the stock just kind of flounders around. Now there has been, one trailing stop move here. And yeah, and so this trailing stop just kind of, it ratcheted up just a little bit because of the forward progress. And so not a whole lot of risk here, quite honestly. And, these things, sometimes a consolidation like this is a good thing if you start to get some forward movement. So this one is actually kind of on what's more unusual about this is that it literally triggered in at the trigger price, right? So it figures, triggers in right at the trigger price and then just kind of trades sideways. So, but hey, no big deal. This thing's only been open since let's see, the trigger was on 12/1 would be the entry day. So 2, 4, this is only the seventh day here, so no big deal. Last but not least, oh, I'm sorry, there's two more. All right, let's look at there's two more. Yeah, CYRX, we looked at this one last week. Not looking too bad, it's kind of, here was the trigger price, there was had a long range day through the trigger price, so the next morning gapped up to here, and then of course pulled back a little bit. Now it's worked its way right back up here. I think I drew this horizontal line. That's sort of the line in the sand where the price is going to need to break through that and but if it can, there's this gap here that could potentially get filled. So it's got a pretty decent looking pattern to it, but um, it's just kind of hanging in there. Sometimes when you get a trigger in like this, there's actually three white soldiers, three big green bars here, and with the third one being a long range one, you can see it retrenched a little bit of backing and filling, and it's still looking pretty good. So nothing wrong with that. It is what it is. Last but not least is EGOV, which this one kind of triggered in on the long range bar too, right? So this is only so yesterday morning would have been the actual entry on this. Oh, yeah. Well, I guess that works because it's right there. So yeah. So anyway, the trailing stop still sitting down here at below this pattern. So sometimes it's above the low of the pattern. Sometimes it's right smack at the low of the pattern. But that's actually a pretty nice, I mean, it's a pretty nice little trend change right there. So 23.85 was the trigger price. When I zoom in on these charts, it makes it a little more difficult to draw. So there was a trigger price right there, and so there's a little bit of a gap up here. 24.11. I mean, that's not very significant. 23.85 to 24.11. So 25 cents basically. So let me go ahead and put the targets on here. The regular target here is at 25. This is not an extremely volatile stock, and sometimes you can tell that by the increments over here. She's 25-cent increments, and so 25 is the target, and so the to compensate for the gap up here, we're only talking a quarter. No big deal. So there we go. Let me mark that on there. And so yeah, I mean this is only today's only the second day that this is open. So interestingly enough, let's put this on here, target 25 while I'm at it. Interestingly enough, this stock is going to need to break out of, it's going to need to break that previous high there. Let me take a look at this. Oh, wow. Interesting. The further you zoom back, so yeah, this recent high here is below the target, so it's going to need to break that. But if you look out bigger picture, there's not a whole lot of resistance until it starts to get up here towards 25.75, 26. So looks extremely doable. And you can see on the chart spots where, and this is what's most interesting to me, is like, so you see this big run up and then it pulled back and you kind of had like this little pivot low sticking out there. And you see this a lot lately. Once when a stock sort of pulls back and then reverses, it tends to get a lot of them tend to get quite a move in the opposite direction, right? And so you got the same kind of thing here. You got this pullback, this little kind of spike low that stands out on the chart, and now it's reversed direction. And so you can see the forward movement it got over here. Same thing. Well, it's a little different over here, but so anyways, it's looking pretty good, quite frankly. Not looking so bad at all. Moving in the right direction. Although this is, like I said, this is kind of a tame stock as far as the price and the volatility. So, but no big deal. No big deal at all. It's all about the percentages. And of course, these targets, well, the target's based on the ATR of the individual stocks. So there you go. As far as pending trades go, I mean, since we have all these open trades here, as far as pending trades go, I think there's only one. This is ABC here. So that's kind of interesting. Nothing too exciting about this chart here. Last week, the trigger was at 104 when I did the show last week. And as we sit now, the trigger's at 103.40. I'll just put this on here just so we'll see what happens next week. And so, yeah, I explained last week about how the trigger, moves down. So, here's the thing is with the trigger moving down, if the price continues to drop, at some point it would just drop off the list. And I'm not sure exactly where, but anyway, Amerisource Bergen. Interesting. So, still completely viable. You zoom out on the chart a little bit, you can see it's a pretty decent little uptrend there. Had this huge run up right here, and so it's kind of in pullback mode. And yeah, and so as of right now, the trigger's moved down a little bit, and It's kind of yeah, it's kind of right above that high. What's that high? 103.30. So yeah, so just above, recent high from a couple of days ago. And so in theory, like if this thing consolidated, down here around 99, 100 for a few days, that trigger could potentially come down even further. Or, the stock could sort of reverse here and rally up and start a new, rally. Ideally, the idea is to catch it back on the upswing there. So we'll see what happens with this. But yeah, it's pretty interesting, to only see one pending trade. And that tells me that the overall market is just kind of the overall market's, not in a position where you got a whole bunch of, really good stocks that have had pullbacks. So, I can't really say it's stalling out, but boy, when I look at this and I just, think about the recent price action here, it feels like it's running out of steam. But then again, here we are we're right in the holiday season, and so, um, you know, that could have something to do with it too. So won't surprise me to see at some point, something like trigger a little bit of a sell-off. But the funny thing is that, based on this run we've had here, I mean, just a sell-off to this trend line would seem dramatic, but it wouldn't be. So I just basically, I like to draw trend lines wherever I can, sort of under the more recent lows. So this is kind of an unsustainable trajectory, but I've seen before, where the market's just kind of on a straight up tear and then it sort of accelerates to the upside. And so there's every possibility. Actually, kind of what we're seeing right here is kind of an acceleration to the upside. So um, never rule that out. Bigger picture, the market reminds me of, like, 1999, 2000. You got some IPOs today. I think what is DoorDash IPOing today, and so I mean you got a lot of crazy stuff. There's definitely stocks are moving humongous percentages up and down on a daily basis. The market's probably as overvalued as it's ever been based on a whole bunch of different metrics. But, and you got everything. You got FOMO, you got, what am I trying to say? Sentiment. The sentiment really is, everybody's decided that the stock market's the only place to be. And so there's just a lot going on behind the scenes. Um, as far as like what's driving the market, but I'm not going to get into all that now. Actually, I'm going to go ahead and wrap it up. So, it's all about price movement in the charts and the stocks that we're playing. So all the rest of that stuff's fun to talk about, but doesn't really matter in the big scheme of things, why the market is doing what it's doing. But as always, you want to be a little bit cautious when sentiment is, kind of frothy like it is right now, but it's going to be interesting to see what happens in the new year, right? So there's a lot that there's a lot that can go wrong, and so quite frankly, it's a lot of people are amazed that the market's been able to do what it has done. But then again, the market does what it's going to do regardless of what anybody thinks about it. So every time I'm cautious, the market proves me wrong. So, anyway, thanks for tuning in. Keep your eye out for trailing stop moves on all these open trades, and I will see you back here next week.